Hi, everybody, and welcome to the November 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. October was a down month for markets across the board, with stocks falling at month end as concerns rose about the outlook for large tech companies. All three major U.S. indices ended the month down slightly, while international markets got hit harder. Bonds also dropped in October on rising interest rates as traders dialed back expectations for cuts from the Federal Reserve. We ended the month with futures markets pricing in between 1 and 2 more cuts through the end of the year, down from earlier expectations of 3 or more. And that pullback in rate cut expectations was due in large part to signs of surprisingly strong economic growth. The last jobs report showed that over 250,000 jobs were added in September, which was well above both the recent trend and economists' forecasts. The strong labor market helped support improved consumer sentiment as the Conference Board Consumer Confidence Index hit a 9-month high. And this combination of strong hiring and rising confidence also drove strong consumer spending growth. September's retail sales and personal spending reports both came in better than expected. And given the importance of consumer spending to the economy, this was a good sign that the fundamentals are still strong. Speaking of fundamentals, we're currently in the thick of earnings season, and earnings are fundamental to the stock market. So far this quarter, roughly half of the S&P 500 companies have reported earnings, with an average growth rate at just over 6%, significantly better than analysts' estimates of 4% at the start of earnings season. Since earnings drive long-term performance, this was a positive sign for markets going forward. But while the solid economic and earnings news are good, of course, there are also real risks in the headlines. Here in the U.S., political risks are at center stage as we approach Election Day, and the uncertainty around the election and the aftermath could well rattle markets in November. Beyond the U.S., there are multiple foreign risks as well. The ongoing wars in Ukraine and the Middle East continue to serve as sources of geopolitical uncertainty, while the slowdown in China remains an economic risk. While the direct market impact from these has been muted so far, we do need to keep an eye on them. But despite those risks, overall, we're still in a good place as we head into the end of the year. Market fundamentals continue to show signs of improvement, while the economic backdrop is still strong. So while risks certainly remain, the most likely path forward is for further economic growth and market appreciation. And that's something to be thankful for as we head into the holiday season. That's it for this month's update. Thanks for watching. Please join me again next month for the latest news. And in the meantime, stay safe, stay sane, and stay healthy. And I hope you have a great Thanksgiving.